Today, we're diving into some intriguing developments in the stock market, particularly surrounding Roaring Kitty and the potential for buying more call options. This could be for the next upward movement, a significant surge, or even the mother of all short squeezes. Additionally, we'll explore why Aron, CEO of AMC, has been notably silent about synthetic shares and short squeezes, with good reason. Let's unpack these topics in detail. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But everyone remember, this is not a financial advice video. To kick things off, let's address why Aron avoids discussing synthetic shares, illegal short selling, or the potential for a monumental short squeeze. Many in the community question why Aron sidesteps queries about when AMC might squeeze, what actions he might take to trigger it, or the exact number of synthetic shares in existence. Some skeptics suggest that Aron collaborates with hedge funds to depress AMC's stock price. However, this theory doesn't hold water. The real reason, which I've pointed out before, is that Aron risks severe legal repercussions if he discusses or attempts to influence a short squeeze. A prime example of this is the recent case involving Metamaterials MMTLP. According to an article, the SEC has charged Metamaterials and its former CEO with market manipulation, fraud, and other violations. The complaint alleges that they misled investors by hinting that a dividend would force short sellers to exit their positions, thereby triggering a short squeeze. This misrepresentation gave investors a false sense of the stock's value and potential. The SEC's action underscores the danger for CEOs like Aron. Discussing short squeezes publicly can lead to hefty penalties and even jail time for market manipulation. This scenario illustrates the cozy relationship between regulatory bodies like the SEC and the major financial institutions. A recent tweet by Kristen Shaughnessy highlights that executives from J.P. Morgan, UBS, the New York Stock Exchange, and Goldman Sachs have been added to the DTCC's board of directors. Regulatory agencies, including the SEC and FINRA, are staffed with current and former employees from these major institutions and hedge funds. This intermingling means these agencies often turn a blind eye to the market manipulations by hedge funds, focusing their regulatory efforts instead on retail investors. The reason for this leniency is tied to the overleveraged state of many big banks and hedge funds. According to Mr. Hamilton, these institutions are currently burdened with substantial realized and unrealized losses. Many are offloading large portions of their mortgage portfolios to manage these losses. This precarious situation suggests a looming black swan event, a term biotech Moose elaborates on. In such an event, the market could initially drop by 5 to 20%, with continued declines over subsequent days. While a total market collapse of 75 to 80% seems unlikely, a significant downturn could force hedge funds into margin calls, thereby triggering a massive short squeeze in heavily shorted stocks like AMC and GameStop. Now, let's talk about Roaring Kitty, who appears to be gearing up for another move. Recent findings suggest that Roaring Kitty might be buying more call options. On July 19th, the $20 call options saw a surge in activity, reminiscent of similar patterns observed back in May, when Roaring Kitty bought into $20 strikes weeks in advance. This strategy led to substantial gains as the stock price reacted. It's worth watching the $20 call options closely to see if more buying occurs, potentially signaling another upward movement. In addition, Chuck Hoddle recently tweeted about the mainstream media's persistent negative coverage of GameStop and AMC. For over 3 years, these outlets have predicted the downfall of both companies, yet neither has gone bankrupt. In fact, both have shown growth. The relentless negativity stems from hedge funds' bad bets on these stocks and their desperate attempts to escape those positions. These daily articles aim to manipulate public perception and drive down the stock prices, allowing hedge funds to cover their shorts at lower costs. Lastly, Ben Mesrich, author of Dumb Money, appeared on CNBC advocating for the elimination of short selling. He pointed out that South Korea recently banned short selling, resulting in a thriving market. This suggestion caused a stir on CNBC, as the notion of banning short selling threatens the status quo of many financial institutions. Mesrich's argument underscores the potential benefits of such a ban, drawing a stark contrast between South Korea's market performance and the struggles faced by markets that allow short selling. In summary, the intricate dance between regulatory bodies, hedge funds, and retail investors continues to unfold, with significant implications for the stock market. Aron's silence on short squeezes is a strategic move to avoid legal trouble, while the SEC's actions reveal the power dynamics at play. Roaring Kitty's call option strategy and the mainstream media's narrative further illustrate the ongoing battle between retail investors and hedge funds. As the debate on short selling gains traction, it's clear that the financial landscape is on the brink of potential transformation. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.